C3.ai Inc. Bursting the bubble or a strong buy? Unveiling the truth. Welcome back to our channel, ladies and gentlemen. Today we have an exciting topic to discuss that has been making waves on Wall Street in 2023, artificial intelligence or AI. And right at the center of it all is a company that has caught everyone's attention, C3.ai. With C3.ai's share prices skyrocketing over 200% since the start of the year, it's hard to ignore the buzz surrounding this AI powerhouse. But as with any meteoric rise, there comes a moment of pause. Is this stock just catching its breath before continuing its ascent, or are we witnessing the bursting of an AI bubble? Before we jump into conclusions or dive headfirst into buying the dip, let's take a deeper look into C3.ai. Join me as we explore the inner workings of this enterprise software company and uncover what sets them apart in the realm of AI. In this channel, we do tons of research about the stock market, and our goal is to help you on your journey to financial freedom so you can live life on your own terms. If you like this video, make sure to destroy the like and subscribe buttons so that you won't miss any of our future content. C3.ai is revolutionizing how businesses harness the power of artificial intelligence. Their innovative software solutions are a game changer in optimizing operations and driving growth. The potential for AI in various industries is immense, and C3.ai is leading the charge. Their ability to analyze vast amounts of data and provide actionable insights is unparalleled. It's clear that C3.ai has captivated the attention of industry experts, but what about the naysayers? Are there any concerns about the sustainability of their growth? C3.ai has certainly seen a remarkable surge, but one has to wonder if this growth is sustainable in the long run. We may be witnessing a bubble that's bound to burst. Don't be too quick to dismiss C3.ai's potential. The AI industry is still in its infancy, and this company has positioned itself at the forefront. Their technology and partnerships are solid indicators of continued success. As the debate rages on, we'll explore the factors driving C3.ai's success, their key partnerships, and the challenges they may face in the ever-evolving world of artificial intelligence. So, how does C3.ai work? Imagine you have a super smart friend named C3.ai. C3.ai is like a computer whiz that helps companies use artificial intelligence, AI, to make their businesses better. It was created by a guy named Tom Siebel, who knows his stuff when it comes to technology. C3.ai has a bunch of cool products. One of them is called the C3.ai Application Platform, which is like a toolkit for building, launching, and running AI applications for companies. It's like having a magic box of tools that lets you create and use AI software without pulling your hair out. They also have another product called C3.ai Applications, which are specific software programs for different industries. It's like having tailor-made solutions for different businesses, kind of like having a personal stylist for your company's AI needs. The special thing about C3.ai is that they make it super easy for companies to use AI. Normally, creating AI software is really complicated and takes a lot of time and effort. But with C3.ai, developers can use simple models to build applications instead of writing long, boring lines of code. It's like giving them a shortcut to create awesome AI software without losing their sanity. C3.ai likes to make money by offering subscriptions to their software. It's like a membership that companies pay for to use their amazing AI tools. So it's a win-win situation. The companies get to use advanced AI technology, and C3.ai gets to keep the lights on. In the epic arena of AI battles, where competitors clash like digital gladiators, we find ourselves pondering the fate of C3.ai. Can they rise above the rest and claim the crown? Let's take a peek into the realm of one of their formidable adversaries, the mighty Amazon. Will C3.ai soar like a phoenix or be Amazoned into submission? Time to uncover the AI showdown of the century. Okay, Amazon. You know, that big company with everything from books to kitchen gadgets? Well, they're already a heavyweight in the business world, and it seems like they might become one of the big winners in the AI revolution. They may not be getting as much attention as Microsoft and other AI big shots right now, but don't underestimate them. In April, Amazon made a fancy announcement about something called Amazon Bedrock. No, it's not a cool name for a new rock band. It's actually their first ever generative AI platform. Basically, Bedrock will give people tools and computer stuff to create their own AI applications. It's like giving you the keys to the AI kingdom. This Bedrock thing is getting cozy with Amazon Web Services, AWS, their cloud infrastructure. It's like having a supercharged engine for your AI adventures. Being a top cloud provider, Amazon has access to tons of valuable data and resources, which they can use to feed and teach their AI systems. They're even making their own semiconductors for AI stuff. Talk about having all the right ingredients. AI and robots might also come to the rescue in Amazon's online retail business. You see, selling stuff online can be a bit tricky because of all the costs involved in the logistics. But with the magic of automation, Amazon can make things more efficient and profitable. Imagine robots zipping around warehouses and making deliveries like superheroes in disguise. It's like a sci-fi movie comes to life. But wait, there's more. AI will also work its magic in the consumer marketplace and digital ads. It's like having a clever assistant that knows exactly what you want to buy and shows you ads that actually interest you. No more annoying ads for things you have zero interest in, like that infamous banana slicer. Now, even though Amazon is already a big shot, the stock market hasn't fully caught on to their AI potential. The stock is down quite a bit, which means it could be a good opportunity for investors who want to ride the AI wave. With their strong position in different industries and AI touching almost every aspect of their business, Amazon is like a hidden treasure waiting to be discovered. So remember, behind the scenes of your favorite online store, Amazon is cooking up some serious AI goodness. They've got the brains, the data, and the ambition to make a splash in the AI world. Who knows, maybe someday Alexa will even crack some jokes that are actually funny. Now, how did C3.ai fare amidst all of this? C3.ai caught the attention of a party pooper called Carysdale Capital, who had some doubts about their accounting practices. They claimed that C3.ai was using billed receivables to pump up their revenue numbers. Well, you can guess what happened next. The stock took a hit, and investors were left scratching their heads. But hold on, let's break it down in simpler terms. C3.ai's revenue actually went down by about 4.4% compared to last year, and to make matters worse, they ended up with a net loss of a whopping $63.2 million. Ouch, that's like finding out your favorite pizza joint has just run out of cheese. Not exactly the kind of financial news you want to hear. But hey, it's not all doom and gloom. There's still a glimmer of hope for C3.ai to turn things around and make a comeback. Despite the risks involved, their market capitalization is around $2 billion, which means there's a chance for some big growth if they can deliver on their promises. And guess what? They've got a cool $790 million in the bank, giving them some financial wiggle room. Plus, they've managed to score some impressive partnerships with big players like Baker Hughes, Shell, and even the US Air Force. It's like being the cool kid on the block with all the popular friends. These partnerships show that others believe in C3.ai's potential and could open doors for future success. Looking ahead, C3.ai has some ambitious plans for this year. They're aiming for sales growth of around 30% and hoping to achieve profitability, that's just a fancy word for making money, on a non-GAAP basis. And get this, they're even planning to introduce new fancy schmancy generative AI features and services. It's like having a secret recipe for AI success. Now, let's not get too carried away dreaming of ChatGPT-like fame. Remember when OpenAI's ChatGPT became a superstar overnight? Well, it's a bit of a long shot, but who knows? C3.ai's generative AI products and features might create some waves and surprise everyone. Imagine if they become the talk of the town just like ChatGPT did. But hey, let's not get ahead of ourselves. Investing in C3.ai still comes with risks, and the stock market can be as unpredictable as the weather. So keep an eye on how C3.ai performs, their partnerships, and the cool stuff they're cooking up in their AI lab. It'll give you a better sense of whether they'll make a triumphant comeback or stay on a wild roller coaster ride. Now the question is, should we buy this stock now? You see, C3.ai recently released their financial results, and while they showed a small improvement in revenue compared to the previous year, it's not exactly mind-blowing. They're expecting just a 5% jump in revenue for the whole year, which is like finding a dollar bill on the sidewalk when you were hoping for $100. And here's where it gets interesting. Some smarty-pants analysts are saying that C3.ai's stock might be overpriced. They're throwing around fancy terms like price-to-sales ratio and median price target to suggest that the stock might not be worth the current hype. In fact, they're even saying that the stock could drop by around 15.8%. Ouch, that's like paying for a fancy dinner and getting a microwave TV dinner instead. So, should you invest in C3.ai at this point? Well, it's a bit of a gamble. The company needs to address some accounting concerns raised by skeptics, and their growth prospects for this year don't exactly scream money-making machine. But hey, if the stock does take a nosedive, smart investors might get a chance to buy it at a cheaper price. It's like waiting for the sales section at your favorite store before splurging on the cool gadget you've been eyeing. Now, here's the scoop on why C3.ai's growth might be a bit lackluster this year. They've been switching up their business model from a subscription-based one to a consumption-based one. It's like going from a monthly gym membership to paying per workout session. They believe this change will speed up the adoption of their AI software, boost sales, and make everyone happy. Sure, this transition might cause some short-term headaches for C3.ai, but they're pretty confident that it's the right move. With the new model, customers won't be locked into long contracts, and they can pay based on what they actually use. It's like ordering a pizza by the slice instead of buying the whole pie and hoping you can eat it all. The good news is that the switch to the consumption-based model is already showing promising signs. C3.ai has been striking more deals, and they've made it easier for new customers to hop on board. This makes sense because the potential for AI software is massive. We're talking about a market that could reach $791.5 billion by 2026. That's like having a truckload of pizza delivered to to a hungry college dorm. So while C3.ai might not be the superstar of the stock market right now, they're just getting started in a gigantic field. As spending on AI software picks up and their new model kicks into high gear, their revenue growth is expected to speed up in the coming years. It's like revving the engine of a sports car and zooming into the future. So keep an eye on C3.ai and see how their story unfolds. It's like watching a thrilling movie with twists and turns. And who knows, maybe you'll get a chance to grab a slice of their success down the road. Until then, sit back, relax, and enjoy the AI roller coaster. And that's a wrap, folks. If you've enjoyed this journey through the exciting world of C3.ai, don't forget to hit that like button and subscribe to our channel for more fascinating insights. Before you go, let's recap the key takeaways. C3.ai has some promising prospects ahead, with projected earnings growth of 50% annually over the next 5 years. That's like hitting the jackpot in the AI stock game. For those of you in it for the long haul, it's wise to consider accumulating C3.ai stock when it takes a dip. Why? Well, they're sitting on a golden opportunity in the ever-expanding AI market, and their shift to a consumption-based revenue model could drive some impressive bottom-line growth. But hey, let's not forget the drama. Keep an eye out for C3.ai's management as they fight back against those allegations of accounting fraud. It's like watching a thrilling courtroom battle unfold. So stay tuned, stay informed, and remember to do your own research before making any investment decisions. Thanks for joining us today, and we'll catch you next time with more exciting adventures in the world of technology and beyond. Until then, stay curious and keep exploring.